Jack Bogle, the man who revolutionized investing and made Wall Street tremble, was born in 1929 just as the world was about to collapse into the Great Depression. Jack's father was once a successful businessman, but on Black Monday in 1929 he lost all his money during the market crash. With no money left and no way to recover, he turned to alcohol, leaving young Jack and his brothers to take care of themselves. The conditions were brutal. His family had lost everything, and survival was a daily struggle for the Bogles. But instead of giving up, Jack Bogle kept pushing forward. While others might have been broken by hardship, he was shaped by it. He learned the value of discipline, frugality, and relentless hard work. Determined to carve his own path, he became one of the hardest working students in high school, earning a full scholarship to Princeton. Yet, even there, surrounded by some of the brightest minds, he found himself constantly struggling to keep up. Rather than accept failure, Bogle did what he did best. He fought harder. He bet everything on his senior thesis, choosing to research a tiny overlooked corner of finance, mutual funds.
I was in Firestone Library at Princeton, just opened, brand new beautiful library. And I can remember the sun coming in over my shoulder. And I can remember opening Fortune magazine at a time when, December of 1949, and when one was thinking about one's senior thesis. I was going to graduate in 1951. You can't start too early at all. And I was a very contrarian young thinker, if thinker is a good word, and very skeptical of everything. Any knowledge that was delivered, I said, wait a minute, let's take a really close look at that. So I was a contrarian. I wanted to write a thesis on a subject that nobody had ever written on before. And I opened Fortune magazine, and there is Big Money in Boston, the name of the article that Mass Investors Trust, the oldest, the largest, and perhaps importantly, compared to what happened later on, the lowest cost. And I thought, well, by God, I'm tiny and I'm contentious, and no one's ever written on this before that I knew of. There may have been something later, but I have never seen it. And I picked on the spot in the library that topic for my thesis, the open-end investment company or the mutual fund.
As he buried himself in research, he discovered something fascinating. Most actively managed funds fail to outperform the market over the long run, yet they still charge investors high fees for the promise of doing so. His thesis was a great success. His sharp analysis and insights into the mutual fund industry set him apart as he challenged the industry's entire way of thinking. Graduating cum laude from Princeton, his work didn't go unnoticed. His success caught the attention of Walter Morgan, founder of the Wellington Fund, who was also his mentor at Princeton. Seeing Bogle's potential, Morgan took him under his wing and brought him into the company.
Mr. Morgan, who I'd met at Princeton, Walter L. Morgan, my great mentor, who I met when he was 50 and knew him for 50 more years. So he was a great mentor. He obviously liked me. He knew what I could do and what I couldn't do. He exposed me to this little 75-person, approximately, Wellington management company. Had $145 million in assets when I walked in the door, and it was probably the 7th largest firm in the business. He was an extraordinary man, a pillar of integrity, very much a Renaissance man.
With relentless ambition, Bogle quickly climbed the ranks. He excelled in the company not just because of his knowledge, but because of his honesty. His integrity and expertise set him apart, earning him a major opportunity at Wellington at a young age.
Mr. Morgan called me into his office one day and said, I want you to start running the company today. And I thought, of course, wow, you surely picked the right man. I was 35 years old, with a little more self-confidence than my experience would have indicated.
Jack Bogle had achieved remarkable success at such a young age. He thrived in his role, earning respect and climbing higher with each passing year. But success, as he would learn, is never guaranteed. Things started to change. Wellington was in trouble, struggling to keep up with his competitors. and Bogle, always sharp, could see the cracks forming. The company's recent performance was slipping, and the pressure was high. He knew something had to change.
I was well aware of the difficulties Wellington Fund was having, keeping its competition. We're at the very much a mediocre balanced fund, but with all the strength of our wholesaling force and our uniqueness, everybody else largely selling stock fund, we were the best selling fund in the marketplace year after year in the fund marketplace. So when performance started to slip, we started to get new managers. And the new manager was not as good as the old one. And they turned over faster. In other words, things changed, and I realized this is a very hard business. And it's hard to be good. And so I knew the first step, I had no doubt, I thought about it a lot before this meeting, I had no doubt we had to bring an equity fund into the business. So there we were, and along comes this opportunity with iVest Fund. And they seemed to go beyond our expectations. Good, but little did I know what I was getting into. A year after we acquired it, it had the best record in the mutual fund industry, or maybe the second best. And then they had, of course, just what we needed for Wellington Fund, brilliant managers. Brilliant managers, write that down. They got their hands on Wellington Fund, and it was a disaster with more junk than you would want to have as compared to the blue chips of the old days. And Wellington Fund, in their 10-year tenure, had the worst 10-year record of any balanced fund in the industry. The mouse swallowed the elephant was one of the things about something like that after the merger took place. And I knew it was a gamble. An interesting sidelight, I knew it wasn't going to be durable.
Jack took the lead at the company, and for a while it seemed like he was destined for success. But after the merger with iVest, everything started to unravel. The company slipped through his finger, and the tide turned against him. Then, in a brutal board meeting, Bogle was fired from the company he had built from the ground.
Everything fell apart. They fired me. And they tried to put out in a press release that said I resigned. And I said, no. You fired me.
Jack Bogle sat at his desk, staring at the papers scattered before him. The weight of failure pressed down on his shoulders. He had dedicated years of his life to the financial industry, yet here he was on the verge of losing everything. His idea for a new way to invest was met with doubt and even rejection. Traditional fund managers were laughing at his plans, sticking to their high fees and promises of making bigger returns than the market. This wasn't the way it was supposed to go, so doubt started to creep in. What if they were right? What if the system really couldn't be changed? He had given everything to this idea, but now it felt like he was up against something too big to fight. For a moment, he wondered if it was time to walk away. But then, as he sat in silence and his mind drifted back to Princeton, he remembered the long nights spent poring over data, uncovering the truth hidden in numbers. His thesis, his first real breakthrough, had been all about low-cost investing. But till now it is only just a theory, an academic idea. But what if it was more than that? What if the key wasn't trying to outsmart the market, but simply owning it? A fund that mirrored the entire stock market with low costs and no need for constant trading. Was it possible? The more he thought about it, the more it became clear in his mind. This wasn't just another idea. He grabbed a pen and started writing, shaping his idea. He imagined a future where regular people could invest and grow their wealth without paying high fees to fund managers. A world where investors wasn't just for the rich, but for everyone. It was bold, it was different, and if it worked, it could change the investment world forever. Was this the path he was meant to take? And there was only one way to find out.
So I'm left with one option: to persuade the directors of the Wellington Fund, where I'm chairman of the board and chief executive. And so I'm left with, will be the administrator, and they will be the distributor and the investment manager. And we agreed to stay out of distribution and investment management. For me, Founders Day, if you will, is September 24th, 1974. And we started off, we had 28 people, counting me. We would be in charge, we Vanguard, the new Vanguard, a name I picked out of a book of naval history.
Jack Bogle decided that there must be a better way to run a fund investment business. And what could have been the end of his career became the start of a revolution.
I decided that there ought to be a better way to run a fund business, and persuaded the directors of the Wellington Fund and the Windsor Fund and the other funds to start a new structure in which the funds were in the driver's seat and not the management company.
Wellington's funds agreed to the arrangement, and the result was the formation of the Vanguard Group, a company that dramatically altered the investment landscape. With Mr. Bogle at the helm, Vanguard opened for business in 1975 with only $1.8 billion in assets under management. A year later, Vanguard launched the first index mutual fund. Ridiculed at first for trying only to track the market instead of beating it, Vanguard 500 Index Fund proved to be a landmark offering.
At Vanguard, he introduced the first ever index fund, a radical low-cost investment approach that Wall Street ridiculed as Bogle's folly. But he knew better. Despite relentless criticism, he stood firm, unwavering in his belief that investors deserved a better way. While at first, few took him seriously. The financial elite of Wall Street laughed at his radical vision of settling for average market returns. They saw themselves as the all-knowing gurus, believing their expertise was essential for clients to make money, driven by ego and a firm belief in their superiority. But Bogle knew the truth. Most fund managers failed to outperform the market in the long run, and their fees only made things worse for investors. So to prove them wrong, he only needed just two things: time and a track record.
I expected it to take off two things, one good, one positive, and one negative. The negative is I expected it to take off much faster than it did. It took 20 years until the mid 90s
Right.
for it to begin to gain real traction.
Slowly, his ideas started to gain traction. As more investors saw the power of low-cost indexing, Vanguard's revolution began to spread. Still, Wall Street resisted, clinging to their high fees and false promises. Bogle's biggest challenge in the beginning was going up against the financial industry with deep pockets and a powerful army of well-skilled and smart marketeers who excelled at selling high-cost investment products that seemed too good to be true.
A bad industry. This industry became a total marketing business. It became an opportunistic business. It became a business creating expectations on past performance that could never possibly be duplicated in the future. Concerned, angry, astonished. There is a fringe element. It's almost entirely in the ETF industry. That's a marketer's dream. People that have no background in the business, Henry Kaufman calls them financial buccaneers, come into the business with a hot idea. And they want to sell, I won't name any names, they want to sell what's ever hot. And you've read interviews with these managers in Barron's, kind of frightening. And they say, well, I know that Japan and Europe, two of their funds, are currency neutral funds, aren't going to last forever. So we'll think of something else when they fail. Was that the way to be in this business? To market products? I don't even like the word product. I banned it here, actually, years ago, to come back. I used to pay a $5 fine if you ever mentioned it. I didn't think we were manufacturers selling products. I thought we were trustees selling fiduciary services. People would say, that guy is a real sap, and he probably is. But I have an idealistic view of the business.
Proving his strategy worked took time and results. Only by showing strong long-term performance, he could convince investors that his way of index investing was the better choice. And so he did.
And then it accelerated And the growth from 1995 to 2016 has been astonishing, and it's sustained. And the cash flows are over 100% of the industries. Vanguard leads in that, and of course. And so it's done a lot of good for a lot of people. People say, why doesn't everybody start an index fund? And I said, the answer to that is very simple. All the darn money goes to the investors. This is a business.
The money's not in it for the...
Yeah, they're in it to earn a return on the capital, particularly the capital that owns the firm, all those conglomerates that own these firms. And the mutual fund division of that firm, or the mutual fund organization that's a subsidiary, has to produce a return on the buyer's capital. And if you don't, the buyer will get somebody who will. I mean, capitalism is a hard business. But the capitalism in our business should be focused on the shareholder who puts up the money, puts up the capital, takes the risk, and ought to get all the reward, and he only gets about a third of it over time. So it's amazing to think in this index boom, we have only one at least vaguely serious competitor. That would be Fidelity. I was telling someone the other day, Christine, that I've been worried about size, getting too big, for as long as I can remember.
Vanguard's size, though, has really been increasing exponentially over the past.
Yeah, and I'm not saying we should stop it. You know, I used to have these arguments with the directors about slowing down our growth. And they said, well, look, you do that, and there'll be a whole lot of investors that deserve to be in Vanguard that won't be there. And so, in any event, I've been worried about it for so long. And in a speech I gave in 1989 to the Vanguard crew, I said, you know, we're starting to get big, and I hope we're very careful as we get bigger and bigger. I'll do my best to make sure that Vanguard is always a place where judgment has at least a fighting chance to triumph over process. And I talked about the perils of looking like a giant mutual insurance company, life insurance company, casualty company. It's just impersonal and all rigid, bureaucratic, about the perils of getting anywhere near that. And when I gave that speech, our assets were $47 billion. And, you know, I'm not saying we should stop it. I am saying we should be very focused on what we have within here.
It took several decades, but the fund demonstrated the merits of indexing and unleashed a tidal wave of money into low-cost index funds.
Over time, his vision reshaped the entire financial industry. What once seemed foolish became the gold standard. And today, index funds dominate the market, helping millions of people build wealth efficiently. Jack Bogle didn't just build a company, he changed the way the world invests.
John Bogle was also a fierce and lifelong advocate for the average investor. He promoted the highest standards of ethics, especially as scandals and market crises periodically rocked Wall Street. His unrelenting criticism of profiteering, self-dealing, and poor stewardship eventually earned him the admiration and praise of investors around the world. He received a long list of honors, including Fortune magazine's naming him one of the investment industry's 4 giants of the 20th century.
Idealism is everything. Sure, it's difficult to measure up to high ideals, but just to have them there as your goal, knowing that you can never measure up to them, is worthwhile.
After a lifetime of reshaping the investment world, Bogle retired as Vanguard CEO in 1996, but remained an outspoken advocate for investor rights and low-cost investing through speeches and his books. Even in retirement, he continued to challenge Wall Street's greed. In 2019, he passed away from cancer, leaving behind a powerful legacy. He democratized investing, making it accessible and fair for ordinary people.
After leading Vanguard for more than 2 decades, Mr. Bogle retired from the Vanguard Board of Directors in 1999. He then formed the Bogle Financial Markets Research Center. A prolific writer and an eloquent speaker, Mr. Bogle wrote numerous books and scores of articles and speeches. Despite having survived multiple heart attacks and a heart transplant, He kept up a busy schedule of public appearances. Mr. Bogle also continued his lifelong commitment to philanthropy and served in a variety of civic roles, including as the first chairman of the National Constitution Center.
I don't know what the future holds. Now, I'm going to guess now. I won't be around then, but the people will really be saying he made a difference in this industry. This one man, this one person made a difference. Even one person can make a difference.
So if you want to watch the next video where Jack Bogle himself warns you about the 5 biggest mistakes every investor makes, you definitely want to watch this video. This is a must know for both beginners and experienced investors. See you in the next video.